One more market voice then. Chakri Lokapriya, Managing Director at TCG Asset Management, is joining us on the show this morning. Chakri, thanks very much for joining in. We're starting off with the polls this morning. Interesting how this race will shape up. It's the starting line. We don't know what will happen at the finish line, but there are a lot of bends and curves in the way. But will that translate into a lot of market volatility?
Yes, you're right. For the next 7 or 8 weeks, I think the markets are going to reflect both the mind and the heart, and the volatility will clearly show up. And so I think we largely therefore have a sideways market until at least maybe at some point if a trend emerges, then it's a different story.
What would you be doing right now in terms of deployment or just safeguarding the cash that you have?
I think we would continue to deploy because we'll use the volatility to our advantage. And we are going into this quarter's earnings, which is not going to be really that great, so which is going to create its own volatility as well. And so I think we will continue to buy from that perspective.
So when you're entering into the earnings season, there would have been a few pockets where you do see material changes happening from the last few quarters to now. Which pockets would those be? Because most of the consensus revolves around metals as a theme playing out this quarter onwards.
If you look back at the Nifty or even the broader market for that matter, whatever were the underperformers of last year are likely to show very strong earnings this year. Banks, cement companies, some of the commodities, they're all going to show strong earnings. On the other hand, you have autos, which were good last year, are going to show kind of weak numbers, as well as weak commentary going into this thing. So I think from that perspective, banks will continue to focus on. It's always been our favorite. Some of the export-related names, IT, chemicals, yes, as well as cement, because it's beginning to show some amount of life after about a couple of years.
Do you think consumption as a story plays out yet again?
Consumption is quite a funny thing in the sense that, household debt has actually increased in this country over the last 2 or 3 years. That largely explains all the purchases that people have made, whether it's buying a small ticket item or a big ticket item like an auto. Now, so against that backdrop, which means incomes have not gone up that much, whereas the consumer debt is increasing, and which is kind of reflecting in the poor auto sales. So from that perspective, I think the bigger ticket items, we will see a slowdown. The smaller ticket will continue to hold up.
But would that also be a function of the fact that, liquidity in terms of lending from NBFCs that earlier on, pumped in money into the system at a pretty easy rate, now is withholding those disbursements, and therefore those purchases are getting delayed?
You're absolutely right, because if you look at NBFCs, their cost of funding has increased. They passed on some of it, and therefore the cost of borrowing for a consumer has also gone up. So in response, they've slowed down their auto purchases. They've slowed down some of the other discretionary item purchases. So I think this will continue to reflect for the next several months to come.
But you won't use this as an opportunity to enter? I mean, these are obviously, prices have come off, valuations have come off, so wouldn't this be a better entry point?
Now, if you look at a company like a bigger discretionary item, like let's say a Voltus, an air conditioner, it's not as big as an auto and not like a small item either. Now, those companies, they have rallied, their valuations are not particularly inexpensive, they kind of reflect. So yes, for the long-term investor, yes, but would you use this as a point of entry? No.
Interesting. Chakri, what's happening to certain beaten down pockets over the last few years that are now making a comeback? Now, real estate is a pocket in focus, right? The last few months have been really good. Godrej Properties at new highs, Oberoi 550. And after Indiabulls Real Estate, the group made an announcement about they're moving out of the real estate business. It's been a move. It's like an announcement that the stock was waiting for. 3 days, it's been on a roll. The top gainer today as well. What's happening with this pocket? And if you have thoughts on what could happen to this as well? I mean, one, the company's intention to sell out the real estate business, and it just triggers a mammoth rally in the stock.
I think it's also got to do with the Lakshmi Vilas Bank transaction.
Completely.
And because real estate has not done well we all know for the last couple of years. There is a huge amount of inventory out there, and that needs to be filled in. You're seeing pockets of growth. So, as far as India Bulls is concerned, I think it's a reflection that their cost of funding, not immediately, but over the next couple of years, will come down and diversify the forms of from where they can borrow. So this is reflecting, and also, you know, I guess they're making it easy for themselves to get an RBI approval.
No, but which is for India Bulls Housing Finance,
Yes.
per se. My question was, what is it that the market is pricing in for India Bulls Real Estate as a stock to move up 35% after this announcement? Is it the belief that the portfolio is good but undervalued, and now if it goes to somebody, some other suitor, the right value could come about?
You know, a couple of weeks ago, you had the India's first REIT.
Yes.
And so that has kind of created a new interest in the sector, that, you know, some of these companies with huge amounts of debt can use some form, either a REIT or other forms of fundraising to repair their balance sheets. So it's partly that which is reflected in the stock.
Okay. The other thing is, we've seen the last few sessions, companies, consumption-related names, in which there have been downgrades that have come in because of higher valuations, and the stocks have duly reacted. Century Ply is a small example, but Asian Paints, for example, right? 2 days on a trot, the stock fell. The concerns on valuations have always been there. Now the sell side is more actively talking about it. As a buy side person, have you been concerned about these valuations, and have you gotten out of the stocks if you had them, or are you staying invested? And conversely, are you using these dips to buy into them if you are convinced about them? What are you doing?
I think, you know, it's a good thing about the buy side and the sell side, in the sense that there is a rotation which constantly happens in stocks of upgrades and downgrades. And for example, Asian Paint saw a downgrade. Now the fact was, it was trading at 50 times, it's still trading at 50 times, and its earnings growth rate is not going to really change that much. So from that perspective, it's still a market leader taking away market share, so we will hold. Will you add to Asian Paints? The answer is no, because it's already up there. And the other consumer names, you're seeing that trend. You know, the really expensive ones will continue to be expensive, but you will make incremental return out of it. Not really. I mean, you would make that marginal return, but not an outperforming return.
I think more than just the valuation, also, you know, the demand within the sector, the slowdown of economic growth, the higher crude oil prices in the near term, I think more of those factors weighed in towards this downgrade, and that would probably be a blip in a longer scheme of things, in a larger scheme of things.
You're right. I mean, if you look at, for instance, this quarter, I think they'll actually have a good quarter, because the inventory would have helped them. And so I think part of the downgrade reflects that, you know, the next quarter will be the opposite. Because the crude has moved up 30%, some of their raw materials have moved up along with that, and whereas demand has not moved at the same pace. And therefore the pricing, they're passing on some amount of the pricing to the end consumer, but the consumer again, end market is again not too very strong. So against this backdrop, I think these stocks you wouldn't really make a strong return, but, you know, they're good names to hold.
Okay.
What else in your portfolio do you think is worth looking at in terms of rebalancing?
You know, I continue to like banks, and I think that you can still make a fair decent return, a strong return at that 20% plus over the next 1 year, buying both the frontline banks as well as the second line banks, both private and PSUs. You know, now in the next week or two, SBI is going to raise about 10,000-15,000 crores to shore up its balance sheet. Yes, will also do that in the coming weeks or month, in a short time frame. So which means there are actions that are being taken to ensure that they can continue to grow or rather accelerate their growth. And the valuations are not really that demanding. Balance sheets are better than they were last year. So that's one area we'll continue to focus on.
You know, it will show in the numbers, won't it, Chakri? This quarter itself, you might probably see the P&L, or this quarter, in the next few quarters, the P&Ls might start showing the impact of, you know, reduced NPAs, credit costs coming off, all of that. Where do you think, from a 3-year perspective, you'll get a bigger bang for the buck? Would it be in a name like ICICI Bank or an Axis Bank? Just play with me. Or would you, from a 3-year perspective, look to put money into a Kotak or HDFC Bank? I'm just using those names as an example to give the variety.
Yeah, even just using those names, I think the first two, ICICI and Axis, are more inexpensive valuation-wise versus the Kotaks and the HDFC, and partly because of well-known reasons that brand, better-run banks, etc., etc. Now, but these banks, the ICICI and Axis, have done a lot of good work in the last couple of years. They changed their book, they've repaired their balance sheet, they're raising capital and all of that. So, which means I think, yes, there's more return to be made in the first two.
Okay. Chakri Lokapriya, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. And of course, we'll get him a number of days now in the next few. More importantly, on the election verdict day as well, it'll be important to get his perspective.